There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Welcome back, traders and investors. We have Craig Erlam on the line. He's a market analyst at Alpari. Craig, how you doing today?
I'm very good. How are you?
Good. Could you tell us about your company, Alpari, and what you do for them?
Oh, yeah, no problem. So Alpari is a Forex broker. We essentially provide a platform and the ability for retail traders, retail investors to trade the financial markets, to take advantage of, hopefully from their perspective, take advantage of some of this recent market volatility we've been having. Of course, we've had quite an excessive amount of market volatility over the last week. But it's just basically a platform that enables your everyday retail trader who doesn't work at one of these major investment banks to still trade the financial markets. From my perspective, what I do here is I basically conduct research of my own. I'm looking at the charts all the time. I'm a trader myself, and my job is simply to, hopefully try and help educate retail traders, tell them what I'm looking at, take them through my charts, and try and help them be as informed as possible, I guess, on what's happening in the markets and why they're moving as they are.
So you write market commentary on everything, the markets, individual equities, commodities, foreign currencies, or what's your forte?
My forte is Forex trading. We are, at the end of the day, Alpari is an FX broker, so we predominantly provide the ability to trade FX. But then, as I'm sure you're all fully aware, the markets are very interrelated, so there's no point in just having a view on the Forex markets or just having a view on the equity markets. Everything interrelates, and therefore you need to have a good overview on many different markets rather than just the particular thing that you trade. But then again, here at Alpari, we offer a number of different things as well as Forex. We also offer precious metals. We also offer CFDs on indices as well. So again, from that perspective, I need to really be having a view on many different things again.
Okay, so the sell-off last week, how did that catch you off guard a little bit? Was something you were looking for? Did the charts have you, pointing out a little bit of weakness? What did you think of the sell-off, and then the quick rebound on Thursday and Friday?
Well, I think the sell-off is something which everyone's really been prepared for or been aware that's going to happen maybe for the last 12 months or so, really. Ever since we reached the point when the Federal Reserve was looking to become less accommodative, was starting that tapering of its asset purchases, which is actually scheduled now to come to an end this month. Ever since then, people have been prepared for this market sell-off. I'm sure everyone has seen the front pages of magazines, of newspapers every day talking about the fact that this index has just reached a new record high. These stocks are now at all-time highs, and I think one of the problems which many people in the industry has had with this is the fact that it's not really been supported by strong fundamentals, both from a company perspective, but also from an economic perspective as well. We're just starting to see stronger growth in the US, just seeing now stronger growth in the UK. The Eurozone could easily fall into recession in the third quarter, and so once we started to reach that phase when one or two major central banks were starting to become less accommodative and maybe even look to raise interest rates, at that point, people started to talk a lot more about the potential for a big correction in the markets. Now, people have been calling for different size corrections for different periods amount of time. I think the most common correction that most people are looking for is around 10% of the market, which we actually achieved in the S&P last week. So maybe that would suggest that the correction's over. But I think everyone's been in agreement that the correction was very overdue. And what we've seen over the last week or two from people trying to decide what exactly is responsible for the sell-off. We've heard everything from Fed becoming more hawkish, which hasn't really been the case. We've heard the slowdown in the Eurozone, which has been the case, but it's been the case now for months. We've even read everywhere that the spread of the Ebola virus has actually also been partially responsible. And to be honest, I think this is all just nonsense. I think this is all just an excuse. I think the simple fact of the matter is the market was due a correction, and when it started to correct, we saw a lot of panic in the markets, and now we've seen a 10% fall off it in a very short period of time.
I think there was some optimism over, on Friday and over the weekend that Germany was, going to bow into, Draghi and get QE going. That hasn't happened as of yet. What's your view? I mean, is Draghi going to get his way over there? Is Germany going to relent? And if they do QE, will it have the same desired effect it had here in the United States?
Well, I guess the biggest problem that they've got when it comes to quantitative easing, now don't get me wrong, everyone seems to want to see quantitative easing from the ECB. I think it's the only thing that will really put people's minds at ease and the only thing that people really accept. But the problem that ECB have got, which no other central banks have had, be it the Bank of Japan, the Bank of England, or the Federal Reserve, is this is not just buying one common debt security. This isn't just buying UK gilts on the debt market, on the secondary market. This isn't just buying US Treasuries. They've got to come up with a format that enables them to buy a whole host of different bonds from the Eurozone. This is bonds that are rated at different classifications that carry different amount of risks. They've then got another aspect which they've got to think about of is this going to equate to funding these governments and helping these governments out, which they're trying to encourage to sort out their economies more, look closer to home effectively and look at more fiscal discipline. So I think they've got a much tougher job when it comes to quantitative easing than the other central banks have had, and that's why they've been so reluctant to this point to do it. Personally, I'm still of the view that we're never going to see quantitative easing from the ECB because of this aspect, and because I think the likes of Germany is so against it. I think we're going to see more other attempts. I think they're going to try and get a little bit creative, as they have with some of the suggestions they made a few months ago. Maybe even more delve more in towards negative interest rates. I think they're going to try and find a way to be a little more creative on that side of things, because I think quantitative easing is just going to be too complex, too difficult, and could just make things a lot more complicated going forward.
Right, they've had some pretty weak data coming out of Germany and some of the other European countries, so we'll see how that plays out. Any other key events this week? We got a whole host of earnings. IBM kind of inflicting its pain on the market today. Any other, whole host of earnings. Apple coming out after the close. Any other key events that you're looking at for this week, perhaps to a clue to the future direction of the market?
Well, yeah, I mean, I think there's going to be a couple of key things this week. I think the first thing that's going to be key is corporate earnings season. Now, we've been, I think, over the last week in particular, the market's been looking for a reason to stop the rut, essentially. So they've been looking for a reason to buy into this sell-off, and there hasn't really been that reason there. Every little bit of news that's come out, there's put a negative spin on it. If it's strong US data, then there's more chance of the Fed tightening policy. If it's weak data, then it's growth fears in the US. If it's more weak data on the Eurozone, it's more of a growth concerns in the euro area. If it's falling, everything seems to have a negative spin on it. It's almost the opposite to what we had 12 months ago. For those of anyone who doesn't remember, 12 months ago, because there was so much more talk about quantitative easing and looser monetary policy, any type of data that came out, people found a reason to buy into it. If it was weak data, more chance of QE. If it was if it was good data, the economy's recovering. And now we're almost seeing the opposite of that. And I think what we really needed now was a reason to buy into this pullback. Like I say, we've seen quite a huge pullback in the space of a very short period of time, and I think we've hit correction territory now. And I think if we continue to go in this direction, then we're starting to move towards bear market territory, and I don't think we're quite there yet. At the end of the day, we're, apart from the Eurozone potentially falling mildly into recession overall, that is, the US economy is performing well and the UK economy is performing well. So I don't think we're headed towards bear market territory. So I think we're now reaching those levels where people are going to be looking for reasons to buy. And I think what can encourage people to do that is going to be earnings season. We've got 20% of the S&P 500 companies reporting this week alone. We've got Apple reporting later on. We've got a number of major companies. So I think that's going to be a big driver for the markets, because this is going to be a key driver of sentiment in the markets. And that affects not only equity markets, but all other markets as well. We've got things like the Bank of England minutes as well, which could have an impact. We know that two members actually voted in favour of a rate cut cut previously. If we see that again, or if we see more interest in a rate cut, then that could firstly it could spook investors, but it would also be very positive for the pound, you'd imagine. Then again, if they take a step back from any of this, then people could start to be talking then about the first rate hike maybe not coming until the end of next year if the central bank's seen as becoming more dovish, especially with the Fed to follow shortly after. I think the Bank of England and the Fed seem to be in a similar position right now. So when you see one start to change its stance, then you'd expect to be seeing the same from the other side as well.
And
Plenty of economic data later this week as well. So we've got retail sales from the UK, PMI readings. There's a lot to look at this week. I think there's a lot of economic data later on this week, but I think the biggest driver maybe is going to be that earnings season.
Okay, and just a strong rise in the dollar here. Kind of caught a lot of people off guard with weakness in the euro. Now, there's a lot of companies that, U.S. companies that are doing business overseas, and the rising dollar makes their goods more expensive. Do you think, do you think they're going to see, from these multinational companies, do you think you're going to see a big dollar effect in this upcoming earnings season?
Yeah, I think this is going to be one of the key themes. If I'm perfectly honest, that big rally in the dollar, like you say, it makes when you're looking at other countries, it means that effectively when these big US companies are converting their profits from other countries, from eurozone countries back into dollars, they're effectively getting less for their money. So I think that could be one of the key themes that we do see in this earnings season. I think there's going to be a number of themes because we're also seeing a bit of a slowdown in China, so maybe demand in China is going to be falling as well. But then you've got to look at the US. You got to look a little closer to home and see that demand is growing in the US. We know that these companies have got big stockpiles. Maybe they're going to start to look to invest. I think there's going to be a number of big themes in the US, and I think the currency situation is certainly going to be one of them.
And finally, I mean, we have just have to mention, the whole thing with Ebola and the effect that this has had on the market, a very headline news driven market. You been doing any commentary on that, and what's your outlook? I mean, the media obviously, and us included, can make a bigger deal out of things than they are. Do you think this is something that just like the Russians invading Ukraine back in August had a big negative effect on the market, yet we shrugged it off and go back to new all-time highs? Is this within a couple months? Is this something we're going to be looking back and say, wow, we just got spooked out of the market by something that really wasn't that big of a deal?
Well, to be honest, I've been very skeptical all along when Ebola's been attributed, when the sell-off's been attributed to the spread of Ebola, because yes, it is the thing that's in the headlines, and therefore it may be very easy to attribute something like the spread of Ebola to a market sell-off. And of course, it is going to affect some areas of the market. Things like airliners are going to obviously be impacted, and pharmaceutical companies may also be impacted. So there is going to be niches in the market where you are going to see an impact as a result of the spread of the Ebola. But I think when you're talking overall market sentiment, I think what we tend to see more of is it tends to be these sensationalist headlines that people are trying to create, linking the two together, rather than any actual strong underlying reason why this spread of Ebola would be spooking the markets to the extent we've had. I think this is just one of a long list of things which it's been attributed to, and for me personally, it's not something I've ever personally really bought into.
Okay, we've had Craig Erlam on the line. He's a market analyst at Alpari, writes commentary for them. Also, you can find Craig on YouTube, where he gives short market updates. So, Craig, thanks a lot. It's great to get a view from across the pond and level-headed thinking. We appreciate it. Thanks for coming on Benzinga's Pre-Market Prep, brought to you by Charles Schwab.
Great, thank you very much for having me.